Until the stimulus package is enacted, the Democrats want to sign the American Rescue Plan into law by March 14th. The progress of the bill is going to remain near the top of the list in terms of investors' concerns. Reflecting the game-changing nature of January's Senate race victories in Georgia, Democrats passed a budget resolution, with Vice President Kamala Harris casting the deciding vote, allowing the Empower Party to push forward with the budget reconciliation process. The Biden administration isn't guaranteed to go down this path. The president is still seeking a bipartisan solution. However, if the Republicans don't play ball, the framework is in place for the Democrats to move forwards on their own. Investors will also be on the lookout for any hiccups in the vaccine rollout stateside. Currently, around 1.3 million Americans are being vaccinated daily, with more than 30 million people having received their first dose. However, Dr. Anthony Fauci has said that there is still much more demand than there is supply. A vaccine shortage like we have seen in the Eurozone could undermine confidence in the US markets. The efficacy of the vaccines, specifically the AstraZeneca Oxford preparation, is also a concern for the markets this week. Certain European nations are claiming the vaccine isn't effective in over 65s, a claim that has been challenged due to small sample sizes in the relevant studies, while South Africa has gone as far as suspending the use of the vaccine after a study showed it offered minimal protection against the country's COVID-19 variant. Any further update on the efficacy of not only the AstraZeneca Oxford dose, but the Pfizer and Moderna vaccines and any other impending treatments against the various COVID-19 strains now emerging is going to potentially dictate trading in the coming weeks. Beyond that, the economic calendar doesn't have too much to offer this week. The JOLTS job openings figure is out on Tuesday, followed by inflation, which rose to 0.4% last month on Wednesday, jobless claims on Thursday, and consumer sentiment on Friday. While the big tech stocks have all reported, there are also still a fair few recognisable names left to update investors this earnings season. One of those firms is Twitter, which posted its fourth quarter figures on Tuesday. The social media company's Q3 numbers were a bust, unveiling 187 million active daily users against the 195 million forecast. That was an addition of just 1 million new users across the quarter. If the pace of additions doesn't pick up during Q4, the stock could be in trouble. The rest of the calendar sees Coca-Cola and General Motors report on Wednesday, followed by Disney and PepsiCo on Thursday. As mentioned, however, the undoubted focus this week will be the progress of the $1.9 trillion stimulus package. That is the underlying market mover at the moment, and likely will be until the package has been passed. Or that at least is the underlying positive market mover. Then on the other hand, I think the rise of COVID-19 variants around the world and questions over the efficacy of the vaccines against those strains is sort of the counterweight to the positive momentum caused by the US stimulus package. At the moment, the Dow Jones is essentially at all-time highs, so it's going to be interesting to see whether it becomes more receptive to negative news as investors get a bit nervy at those current 31,250 levels, or whether it's going to burst through towards a fresh record peak on the back of the progress of the nearly $2 trillion stimulus package and the sort of the aggressiveness of the Biden administration pursuing that package.